Laura.
Perfect. Sorry, can everybody hear me okay?
Yeah.
Loud and clear. Perfect. So first of all, thank you so much for having us in this panel, and good evening to all participants. So a couple of words about me. I am working as head of strategy for the EMEA business within wealth at BlackRock. And with that, I am also responsible for what we call wealth solutions or like specific solutions for wealth clients. I joined BlackRock roughly 4.5 ago, after 10 years in consulting, and I share, as I think almost all the participants here, an experience of an MBA. In my case, it was Columbia. Now 12 years ago. Seems like yesterday, but yeah, so we are double-digit years already.
All right, thank you, Laura. So this is Massimo Stabilini. Can everyone hear me? All right, great. So, well, thank you, Massimo, for the speech. It was extremely interesting. And so a couple of words about me. I set up a small hedge fund about 3.5 years ago. Literally started with 1 million AUM. Now we're still a very small hedge fund with just 5 people and just about 80 million AUM. And we're looking forward to grow more. We're based in London. We're called Sinclair Capital. And before that, I worked for about 6 years for a famous New York billionaire who is still a big hedge fund manager called John Paulson. Before that, I did M&A, New York, and the MBA I did was at HBS, Harvard Business School, in 2006, 2008. That's all. Alessandro, if it's okay, I'll start with the first question.
Yes.
Great. So Massimo, the question from me is, which opportunities do you think for new entrepreneurial ventures are particularly interesting in the asset management industry? I was thinking it could even be something that maybe someone pitched it to you as an investor, just, which space you found particularly interesting, compelling for a new venture in the asset management industry. Thank you.
Well, the first thing I would want to say here is to not do like I did, because I started my own company right after the MBA, and I have to say I was very lucky because we had a good idea at the right time in the right country, but we were completely unconscious about the risk we were incurring and completely lacking any skill set in managing people and organizational processes. So at the time, we did things that today probably would not end up that well, because we'd have position in treasury levered 90 times in repurchase agreement with probably 90 times our equity capital, close the office and go out with a girlfriend, which I wouldn't be able to sleep now for probably a week after something like that. So my first suggestion would be get a good experience for 5 to 10 years in a large organization. And then when you build the experience, you build the confidence, you build the relationship, start your business, even if you have a good idea at the beginning, because we all know the startups that are very successful, that there are many more that fails. Having started with this caveat, I think that the classic long-only asset management industry is now too competitive, and the basic structural costs, mainly driven by governance, are too challenging. I think it's the alternative, the space where I would build, and it could be both in private assets, where a small team of very capable individuals, 4 or 5 people, can build, and coming from someone that is already, where they've been already working. If they have a funding of the first product, then can easily build traction. I've seen multiple initiatives in this space in private equity, in infrastructure, in direct lending more recently. I've also seen it in a group of 35, 38 years old, super capable young investors that were coming from large organizations that started up their own fund, luckily, on funding 1st of April. I invested with them, and they're having one of those lucky starts where they're up 25% year to date. And that creates such an image that they're already beyond their most optimistic vision of assets under management for year one. So, alternative strategies and private assets.
Thank you.
You can go next.
Yes. So first of all, thanks, Massimo, for your keynote speech. Already touched on so many quite secular trends characterize the industry. So one is definitely private assets. You just reiterated. During the crisis, we have seen even more focus on this asset class. Also because of course, on one side, the benefits for the investors, but also potentially the benefits for local economies. So that private assets are a way to support small businesses or local realities. And we've seen some states also being quite thoughtful already on potential ways to support an increase in investments in the private sector. So how do you see this development going on in Europe? What's the role of asset managers to potentially propel further growth, wealth managers, local policy makers, etc.?
Well, Laura, it's quite a broad question. Of course, I try to give probably what is a limited answer. I think that in the current environment, the need to restart the economies will focus on those areas where the capability to create employment and make our economy, our European economy, more competitive will be more effective. And so I'm thinking about the infrastructures. I'm thinking about the digital investments, so how to create the highways for digital development and 5G. And I'm thinking of a continuation and a restart, because it has been slowing down, of the development for green energy. These three are the sectors where I see the policymaker will try to focus most and where capital is mostly appreciated. Now, there is a fourth one that was an interesting opening because of the difficulty for a commercial bank to finance, and it's related to the micro and small enterprises, and that is where direct lending had been building up their business. I probably see a little bit less of that because the government are now pushing some of the banks through facilitating instruments and legislative developments to lend, at least on a temporary way, to the small companies. So that is probably a bit more limited, but the same capability of direct lending could go into managing a distress situation in 3 to 6 months, once all the limitation to redundancies and the extraordinary support that is being put into the market will start to withdraw.
Thank you.
Massimo, you want to go next?
Thank you. Yeah. Massimo, you touch on ETFs and quants. Basically, my question I think you touched on it. I was wondering where you see the future of, what's the way for an active management firm to get out of the ETFs and quants trap these days? Is it just consolidation and taking care of costs, or there's still some innovative ways today, like Pictet did with the thematics 10 years ago? Is there something that can still be new and really add value and differentiate?
Well, in a way, I think I answered that in the conclusion before. What I'd like to add here is that I don't see ETF and quant in the same space. In a way, almost every strategy is using more quantitative tool to better risk management and develop their portfolio construction, as well as you have whole products that are built by active manager in quantitative way, because you can have active quant. A very successful one actually at Schroders that was developed back in 2001 and took many years to be successful. It became a superstar product. It was called QEP, Quantitative Equity Products. ETF, it's a business that is dramatically concentrating. You need enormous scale. Margins are going towards zero, and you basically make money out of stock lending. So in your question, I see a difference between quant, that is going to a limited number of mega firms and a very small number of super specialists. And on the other side, quantitative techniques that are being developed into product or adopted by the fund managers. In this, I think I cannot avoid mentioning how much envy I had for how much BGI had helped BlackRock to become a worldwide leader. I'll tell you a little industry secret. We actually were negotiating and were one of the bidding with a private equity firm for iShares. Unfortunately, it came quickly apparent that Barclays needed cash and needed cash urgently, and that the operating system were too much tied up between passive BGI and the iShares, so the ETF business. So they decided to sell altogether. The price tags tied up to 10 to 12 billion. And notwithstanding we were a private company, we were controlled by a family that has been around 200 years and there's all intention to stay around the next 200 years. And so it became too big a ticket for us.
Next.
So I can go next. So let me, Ale, of course, tell us when we're short of time. But I have another question actually on ESG. And ESG was touched on earlier on. It is definitely a very important topic and is a fundamental theme that is attracting a lot of attention and investments in the industry. Is it? What would you think it would take for banks to scale up implementation so that we don't get in a situation similar to the one you mentioned of Sharia, where ultimately, while there is appetite and demand, it's very hard to get scale with servicing it?
Well, there are two aspects. One is the definition, as I mentioned, of what the strategy means and what is included, what is excluded. And the other one is, which is very important, are the middle office operating systems that facilitate the job of the fund manager in the portfolio construction. I was actually talking about this right this morning on the subject. There are some providers that are building the active screen. That means that you make the decision, but then the screen make the search for you and help you analyze the portfolio construction and the risk in portfolio construction. In such a way, you could facilitate enormously the work of the fund manager. But to me, this is secondary from the first one, that is the definition. Having a standard definition that is accepted worldwide.
Thanks.
I think we're running out of time.
Yeah, I think we are almost out of time. I know you need to leave in 15 minutes. So let me do this. Let me invite on stage Francesco, who is the president of the NOVA organization, and he will have a closing remark. And then after Francesco, I will close this live session. Then we can go back to the tables, and I will kindly ask you, Massimo, to join the speakers table where the one-to-one has been arranged. So let me first invite Francesco on stage.
Okay, can you hear me?
There he is. Yeah, we can hear you loud and clear.
Perfect, perfect. So very quickly, first of all, of course, I want to thank our speaker today, Massimo Tosato. It's been very interesting, and for us as an association, it's very important to be able to organize this type of events with our alumni, because it's very inspirational and it's also very interesting. And for us, it's also an occasion to meet the speakers and meet personally. This year we couldn't do it in person, but otherwise this would have been a great fireside chat in London, for example. So hopefully in the future, in the coming years, maybe we can organize a follow-up in person in London. I'm sure many people will really appreciate that. Also, I wanted to thank, of course, Alessandro, Laura, and Massimo Stabilini for being so kind to organize this great event. We are a volunteer association, so this would not have been possible without the three of you. So thank you for that. Also, of course, thanks to everybody who participated. I know there are people connected from the West Coast, East Coast, London, Italy, Switzerland, and several other countries. So that's great. And finally, just wanted to give you a reminder that this year we will not be able to have a physical conference. As you know, every year the business schools, we run a contest among the students in the different business schools to host our annual conference. This year, Harvard and MIT had won, but Columbia had done also a great pitch. So we had asked them to work together. So it was going to be a great event in Boston, but organized by Harvard, MIT, and Columbia. Because we cannot do it in person, we are having a digital event on October 17th. I hope you'll be interested to enrolling in our mailing list and maybe attending that event. During that event, we'll be launching something new for us, a NOVA Foundation, which is going to be a way to use the connections that we have with speakers and sponsors to try to give back. So it's going to be focused on giving back to the talent pipeline in Italy, focused on mentorship, scholarships, and so on and so forth. So we hope that several of you will be interested in joining the event on the 17th, essentially a month from now, and then potentially following up with us on ways to give back and help out. In the meantime, thanks a lot. Thank you, Massimo Tosato. Thank you, Alessandro. Thank you.
Ciao, Francesco. Grazie.
Grazie.
Very good, wonderful. So we'll end the session, and as I said, all of you should go back on your tables, except the people that are invited for the one-to-one session.